Question 521. Deeds are recorded and indexed based on A. Year of the recording. B. Grantor and grantee's names in alphabetical order. C. Location of the property. D. Legal description of the property. Correct answer is B. Grantor and grantee's names in alphabetical order. When deeds are recorded at the county recorder's office, they are typically indexed in two main ways. 1. Grantor index. Alphabetical listing by the name of the person or entity transferring the property, the seller. 2. Grantee index. Alphabetical listing by the name of the person or entity receiving the property, the buyer. This alphabetical indexing by name allows title companies, legal professionals, and the public to trace the chain of title for a property by searching the records for past and present owners. Question 522. The following is not a major participant in the secondary mortgage market. A. Ginnie Mae. B. Fannie Mae. C. Federal Reserve Board. D. Freddie Mac. Correct answer is C. Federal Reserve Board. The secondary mortgage market is primarily driven by government-sponsored enterprises, GSEs, and agencies. These entities purchase mortgages from original lenders, then either keep these loans or transform them into mortgage-backed securities, MBS, for investors. This process provides liquidity to the primary mortgage market, encouraging further lending. These participants play a crucial role in providing liquidity to the primary mortgage market, making it easier for lenders to issue more mortgages. The options provided include A. Ginnie Mae, Government National Mortgage Association. Ginnie Mae is a government corporation within the U.S. Department of Housing and Urban Development, HUD. It guarantees MBS backed by federally insured or guaranteed loans, like FHA and VA loans, playing a significant role in the secondary market. B. Fannie Mae, Federal National Mortgage Association. Fannie Mae is a government-sponsored enterprise, now under government conservatorship, that purchases conventional mortgages and securitizes them. It is a major player in the secondary market. D. Freddie Mac, Federal Home Loan Mortgage Corporation. Freddie Mac is also a government-sponsored enterprise, also under government conservatorship, that purchases and securitizes conventional mortgages, similar to Fannie Mae, making it a key participant in the secondary market. The Federal Reserve Board, also known as the Fed, is the central bank of the United States. The Fed plays a critical role in the overall financial system and influences interest rates and monetary policy. It is not a major direct participant in the secondary mortgage market in the same way that Ginnie Mae, Fannie Mae, and Freddie Mac are. The Fed's actions can indirectly impact the mortgage market, but it doesn't typically buy and sell mortgages or mortgage-backed securities on a large scale to provide liquidity in the same way as the other three. Therefore, the entity that is not a major participant in the secondary mortgage market among the options provided is the Federal Reserve Board. Question 523. Easements can be terminated in the following ways, except A. Merger of the dominant and servient tenement. B. Prescription by the owner of the servient tenement. C. Revocation by the owner of the servient tenement. D. Release provided to the owner of the servient tenement. Correct answer is C. Revocation by the owner of the servient tenement. An easement grants a non-owner the right to use a portion of another person's property, the servient tenement, for a specific purpose. The owner of the servient tenement, the burdened property, generally cannot unilaterally revoke a validly created easement simply because they change their mind. Once established, an easement is a property right that runs with the land. Let's look at why the other options are valid ways to terminate an easement. A. Merger of the dominant and servient tenement. If the ownership of the property benefiting from the easement, dominant tenement, and the property burdened by the easement, servient tenement, come under the same owner, the easement is automatically terminated. You cannot have an easement over your own land. B. Prescription by the owner of the servient tenement. This is essentially the opposite of creating an easement by prescription. If the owner of the servient tenement openly, notoriously, hostilely, and continuously interferes with the easement rights for the statutory period, the easement can be terminated. D. Release provided to the owner of the servient tenement. The owner of the dominant tenement, the one benefiting from the easement, can voluntarily release their easement rights by executing a written release and recording it. This effectively terminates the easement. Therefore, the owner of the servient tenement revoking the easement on their own accord is generally not a valid way to terminate it. The easement is a right held by another party and cannot be extinguished at the whim of the burdened property owner. Question 524. If a borrower makes full payment on a note secured by trust deed on his property, the trust deed beneficiary must arrange for the reconveyance within A. 5 days of the payment, B. within 30 days of the payment, C. within 6 weeks of the payment, D. there is no time deadline to make the reconveyance. Correct answer is B. within 30 days of the payment. In California, where trust deeds are the common security instrument for real estate loans, the law specifies a timeframe for the beneficiary, lender, to take action once the loan is paid in full. California Civil Code Section 2941 outlines these requirements. Specifically, upon full payment and satisfaction of the secured obligation, the beneficiary is required to request the trustee to execute and record a full reconveyance of the trust deed. This action must be taken within 30 days of the payment. Therefore, the trust deed beneficiary has 30 days from the date the borrower makes the full payment to arrange for the reconveyance of the trust deed, thereby clearing the lien from the property title. Question 525. During escrow, prepaid rents are usually. Prepaid rent covers a period that extends beyond the date the buyer takes ownership of the property. Since the buyer will be the one providing tenancy for the portion of the prepaid period after closing, they are entitled to the benefit of that prepaid rent. Since the buyer will be the one providing tenancy for the portion of the prepaid period after closing, they are entitled to the benefit of that prepaid rent. Therefore, during escrow, the seller is considered to have collected rent for a period they will no longer own the property. To compensate the buyer for this, the prepaid rent is credited to the buyer on the closing statement. This reduces the amount of money the buyer needs to bring to closing. Conversely, the prepaid rent is effectively debited to the seller, increasing the amount they might owe or reducing the net proceeds they receive from the sale. In essence, the buyer receives the financial benefit of rent that has already been paid for the period of their ownership. Question 526. All of the following would be considered a capital asset, except A. Inventory, B. Structures, C. Land, D. Factory machinery. Correct answer is A. Inventory. In tax law, capital assets are generally defined as property held for investment or personal use. They are not assets held for sale to customers in the ordinary course of business. Inventory refers to goods held for sale to customers in the regular course of a business. Therefore, it is specifically excluded from the definition of a capital asset. Structures, like buildings, are typically considered capital assets, especially if held for investment, e.g., rental properties, are used in a business, though depreciation rules might apply differently. Land held for investment or personal use is a classic example of a capital asset. Factory machinery. Machinery used in a business is generally considered a capital asset, although it is subject to depreciation. Therefore, inventory is the exception because it is held for sale in the ordinary course of business, not for investment or personal use. Question 527. Writing, for deposit only, on the back of a check creates A blank endorsement, B. Qualified endorsement, C. Signed endorsement, D. It has no legal effect. Correct answer is B. Qualified endorsement. A blank endorsement consists only of the endorser's signature. It makes the check payable to bearer, meaning anyone in possession of the check can cash it. For deposit only, adds a restriction, so it's not a blank endorsement. While a qualified endorsement includes a signature, the term signed endorsement is too general. All types of endorsements require a signature. The key difference is the additional wording that modifies the purpose or liability of the endorsement. Writing, for deposit only, has a significant legal effect. It instructs the bank on how to handle the funds and limits the further negotiability of the check, providing a level of security for the endorser. A qualified endorsement limits the endorser's liability. By adding the restrictive phrase, for deposit only, the endorser, the person or entity to whom the check is payable, is instructing the bank to deposit the funds into a specific account. This limits the negotiability of the check and protects the endorser if the check is subsequently lost or stolen. It ensures the funds go directly into the intended account. Question 528. If a caller refuses to give their name at the beginning of a phone inquiry, the appropriate response by an agent is to A. Hang up the phone and move on to the next call, B. Interject useful information to keep the conversation going, C. Pass the call to someone else in the office, D. Keep asking the caller for his name throughout the phone call. Correct answer is B. Interject useful information to keep the conversation going. Giving up on the phone call, even if a caller does not want to provide his name for whatever reason, should run counter to the agent's training and instincts. The agent should try to maintain the possibility of forging a connection beneficial to both himself and the future client. The goal of handling an inquiry is to be helpful. By providing relevant information related to the likely reason for their call, the agent can demonstrate value and build trust. The caller might feel more comfortable sharing their name once they see the agent is knowledgeable and can assist them. Focusing on the substance of the inquiry first can often lead to the caller feeling more at ease and eventually providing their name if necessary for further assistance. Hang up the phone and move on to the next call is unprofessional and provides poor customer service. While identifying the caller might be ideal, immediately terminating the call because they haven't given their name prevents the agent from understanding and potentially addressing their needs. Randomly passing the call is unlikely to resolve the situation, unless there's a specific protocol to handle anonymous inquiries by transferring them to a specialized department. The next agent will likely face the same initial refusal. Repeatedly demanding the caller's name after they've indicated they don't want to provide it can be confrontational and make them even more reluctant to engage. It prioritizes identification over addressing the reason for their call. Question 529. A personal easement in gross. A. Benefits a person, not the land. B. Creates no dominant tenement, just a servient tenement. C. May not be assigned to a third party. D. All of the above. Correct answer is D. All of the above. A personal easement in gross is a type of legal right that allows an individual to use someone else's property for a specific purpose, but it's not connected to any specific piece of land the beneficiary owns. Unlike an easement appurtenant, which benefits a specific parcel of land, the dominant tenement. Since the benefit is tied to a person and not a specific piece of land, there is no dominant tenement, the land benefited by the easement. There is only the servient tenement, which is the land burdened by the easement. Personal easements in gross are considered personal rights and are not transferable or assignable to another person unless the specific terms of the easement explicitly allow for assignment. This is because the easement is often granted based on a personal relationship or a specific need of the original grantee. A neighbor may have a personal easement in gross to cross your property to access a fishing spot on the lake behind your house. A utility company might have a personal easement in gross to access and maintain power lines that run across your property. Question 530. The Uniform Commercial Code, Division 6, which pertains to bulk sale transfer of business goods, is designed to protect A. Creditors, B. Sellers, C. Buyers, D. The IRS. Correct answer is A. Creditors. When a business sells a substantial portion of its inventory or equipment, a bulk sale, outside the ordinary course of business, there's a risk that the seller will take the proceeds and disappear without paying their outstanding debts. UCC Division 6 aims to prevent this by providing a mechanism for the seller's creditors to be notified of the impending sale and to assert their claims against the proceeds. Here's how it generally works. Though specific provisions can vary by jurisdiction, and many states have repealed Article 6. 1. Notice to creditors. The seller is typically required to provide a list of their creditors to the buyer, and the buyer must notify these creditors of the bulk sale before it takes place. 2. Application of proceeds. In some versions of Article 6, there are provisions for the proceeds of the sale to be applied to the seller's debts to their creditors. While the UCC generally aims for fairness in commercial transactions, the specific focus of Division 6 regarding bulk sales is to safeguard the interests of those who have extended credit to the seller. As mentioned, many states have repealed Article 6 of the UCC, finding it outdated or creating unnecessary burdens on businesses. In jurisdictions that still have it, the specific requirements can vary. However, the fundamental goal of creditor protection remains central to its original intent.